Just when it seemed like the market was finally turning, boom, all the gains erased in a second. It's clear that this year, macro has been the driving force, and that there's one man that stands in the center of all of this. It's Trump. Every major move in the market has been a direct response to his seemingly unpredictable announcements. So, is he simply just a reckless force of chaos, or is there a strategy in the madness? Trump doesn't just react to markets, he's shaping them. When the Fed, Jerome Powell, refused to play ball, he didn't just wait, he took control. Decisive, relentless, unapologetic. He warned us, short-term pain, he's fine with that, as long as it leads to long-term dominance.
We may have short-term, some little pain, and people understand that.
So today, I'll be breaking down his bigger plan and why this tough macro period might be exactly the setup the crypto industry is looking for to create the strongest and most fierce bull run in history. Strap in, ladies and gentlemen, because what's coming next could be the opportunity of a lifetime. Without further ado, ladies and gentlemen, let's get into it. As you guys can see from the day to day, the US markets are currently trading at the moment. This is the stocks. Stocks are not looking good. On today, we're down already 3.6% on the NASDAQ, 3.3% on the S&P 500 on the weekly. And crypto also not looking good. Most of the majors are down a lot. I mean, 15 to 20% drop on the majors is pretty brutal, guys. But in the video yesterday, Benjamin Cowan did literally tell us exactly what was going to happen, and it literally happened, right? He said essentially that the markets can't rally off news alone. And just as quickly as it went up, it literally went back down. And this is just some fun facts for you, ladies and gentlemen. Kobolesi later says, this is absolutely insane. At 9:30 a.m. Eastern time today, the S&P 500 opened 30 points higher, and crypto hit its highest level in a trading session. This was yesterday morning, or at least my time, when everything skyrocketed up after the post that we talked about on yesterday's video. By 2:30 p.m. Eastern time, the S&P had lost $1.5 trillion of market cap, and crypto was down $300 billion. That's a $1.8 trillion loss in market cap in 5 hours. In other words, between 9:30 a.m. and 2:30 p.m., the S&P 500 and crypto lost $360 billion per hour. That's more than the entire market cap of Bank of America lost every hour on average. We are witnessing history, ladies and gentlemen, and not in the good way, but in a way. So this video today, ladies and gentlemen, this video is all about what the hell is Trump doing? And yep, it's official. These tariffs on Mexico and Canada go into effect tomorrow.
So we're going April 2nd, but very importantly, tomorrow tariffs 25% on Canada and 25% on Mexico, and that'll start. So they're going to have a tariff. So what they have to do is build their car plants, frankly, and other things in the United States, in which case they have no tariffs.
Yep, goes into effect, right? And just after this press conference, minutes later, President Trump also signed an executive order raising the tariffs to 20% in China. We know this. Actually, we talked about this before. But then China retaliates, and China imposes 15% retaliatory tariffs on select U.S. goods. I don't know which select U.S. goods they're going to be, but the interesting thing too is that I think that for most people, they would view this as a trade war. I don't think President Xi or President Trump necessarily care that, well, probably hurts China more than it would hurt the United States. Why? Well, it's because it's the way that China became a superpower. Like, China has more middle class or upper middle class than the entire United States population, right? So to put that in perspective, why? Because they exported everything to the rest of the world, right? They were able to do ultra cheap labor for a long time, mass manufacture goods and export it to the entire world. And because it was so cheap to buy everything from China, those things stopped being manufactured in domestic countries like the United States bringing all the wealth over to China, which is why they're now a mega superpower, just second to the United States. If you take debt in consideration, they might even be bigger by now. I don't know, but they're definitely catching. Let's talk about the size of these three countries, Mexico, Canada, and China. All together account for almost $1.5 trillion in trade between these countries. You can see this is a chart that shows the United States imports and exports. The gray line is the imports, what's coming into the United States, and the green is the exports going out. As you can see, it's importing almost $500 billion from Mexico, almost $500 billion from China, and over 400 billion, 420 billion or so. It's a good number from Canada, right? So the goods obviously coming from these countries are now going to have these 25 Mexico, 25 Canada, and 20% on China import taxes, right? So yes, cost of goods manufactured in other countries are going to be more expensive. This is what Trump hopes to be the outcome of what he's doing. So breaking, Honda has decided to produce its Honda Civic hybrid in the US to avoid tariffs, per Reuters. Previously, Honda had planned to produce their cars in Mexico, which is now facing 25% tariffs. So companies are going to have to make a decision whether they think that the cost savings to produce their goods in other countries like Mexico and China, etc., are going to be enough to offset a 25% tax that's ultimately put on the end consumer. And if that gap doesn't make sense, then they would move their production to the United States, which is what Honda is doing now, which is what the whole administration is trying to do right now. A lot of people are focused on what's happening short term. But guys, if there wasn't a course correction, America was certainly headed for destruction. I mean, I left there a long time ago, and I'm interested in going back now, actually. I mean, we have to see how this plays out. But I'm definitely interested. I have not been interested I never even thought about going back to America since I left 8 years ago. This is the first time, because I was definitely a proud American. I think the founding fathers and the story behind America and how it was created really aligns with my ethos. In America, at its core, the Constitution, how it was founded, the rebel against the Britons, this aligns deeply within me and also within the crypto ethos. The United States wanted to be a sovereign, independent state. So something has to shift dramatically from the previous administrations who keep doing the same thing, spending, kicking the can down the road, reckless spending, inflation running rampant, dollar printing, the weakening of the dollar with no plans on how to stop the inevitable demise of the United States. I mean, Ray Dalio, who's been historically incredibly accurate and very smart when it comes to economics and laying out how the shift and the change of global world powers, wrote a book recently talking about how the US was coming to an end and the next great superpower was likely to be China, unless a major shift happened. And it seems like that's what's happening now. So short-term pain is what we're seeing. But as we continue through this video, we're going to talk about how this is a 4D chess move in order to get the Federal Reserve to comply, to set us up potentially for the best bull run we've ever seen for all assets, crypto, stocks, etc. If you guys are finding value in this so far, do me a favor, guys, hit that like button. If you're new to the channel, my name is Chasse. I've been in this space in crypto for 13 years, and I'm really passionate about what I do. And so I'd love it if you hit that subscribe button and join me and watch my content. I put it out at least 5 days a week, and I plan on doing much more. And considering the move back to America to be in the center of the action. Let me know, guys, in the comments below if you think I should move to America, if you think I should go and do interviews with guys like Brian Armstrong and guys like David Sachs and get into the inner circle and really figure out what's going on. It's what I'm very interested in doing, very much considering it. Let me know in the comments below, guys, if you think I should do that. Let's get back into it. So now we're going to talk about the shift in the macro, what's going on. Like, this is important, really, really important. So Trump made a post on Truth Social saying, to the great farmers of the United States, get ready to start making a lot of agriculture products to be sold inside of the United States. Tariffs will go on external product on April 2nd. Have fun. America, I grew up in America, right? I grew up in California, and I grew up around a ton of farmland. I grew up going to the farmer's market and buying locally produced produce. It was very confusing when I would walk down my street, drive around my city, saw avocados and oranges everywhere. And then when I grew up a bit later, moved to LA, I go to Whole Foods or something and I would see all these avocados and stuff imported from Peru or from Mexico. Why? We have so many of them in the United States. Keep it local. Anyway, this is what's going to happen. It's going to make buying goods produced in America more attractive to purchase than things that are being imported. So as you guys know, we played this clip before. Trump wants interest rates to come down, but he can't control Jerome Powell. Jerome Powell controls the monetary policy, right? He has the ability to print or contract the money supply and adjust interest rates. The government controls fiscal policy, things like controlling taxation and spending, either increase or decrease spending, which are doing decreased spending right now, trying to do what Doge is happening. And then taxes, we don't know yet, right? But tariffs are a form of taxes, is if you're buying imported goods, and could also hurt domestic businesses that are exporting goods as well, as reciprocal tariffs, if there are new ones being put on, then could discourage people in foreign countries to buy US goods. So slowing down of the economy. Now, you have this battle going on between essentially monetary and fiscal policy, Trump versus Powell, the Fed versus Washington. So Trump on Truth Social posted this on January 29th saying, because Jay Powell and the Fed failed to stop the problem they created with inflation, I will do it by unleashing American energy production, slashing regulation, rebalancing international trade, and reigniting American manufacturing. But I will do much more than stopping inflation. I will make our country financially and otherwise powerful again. The Fed has done a terrible job on bank regulation. Treasury is going to lead the effort to cut unnecessary regulation and unleash lending for all American people and businesses. This is crazy. This part is crazy. If the Fed had spent less time on DEI, gender ideology, and green energy, and fake climate change, inflation would never have been a problem. Instead, we suffered the worst inflation in the history of our country, which is true, which is absolutely true. The Fed focused on DEI and gender ideology and the Green News scam. Okay, which is true. And we've played this clip before, if you haven't seen it, but we'll play for you.
Oil prices will come down, and when oil prices come down, everything's going to be cheaper for the American people and actually for the world, but for the American people. So I'd like to see oil prices come down.
And guess what? They are. Oil prices are coming down to 3-month lows, basically really coming down right now. As Kobolesi letter says, breaking oil prices crashed to a new 3-month low as OPEC agrees to proceed with the production increase in April. OPEC will also hike production beyond April. So you have OPEC increasing oil production as well as the United States and the drill baby drill, as Trump has talked about. Because this is actually a really good post that was in the comments of what I just read, and it does explain things quite well. So this is from CryptoBit. Let's see, you deserve a follow here, my man. So this is a very, very good post. It says, Trump's inflation crusher strategy is working as predicted, with oil and energy prices falling exactly what we want. His tariffs are pressuring global markets and lowering 10-year bond yields and slowing worldwide GDP growth, pushing nations to align with U.S. policies. In just 45 days, Trump has curbed inflation more effectively than the Fed has in 4 years. If the Fed cuts rates next, borrowing costs will drop, sparking economic growth. A weaker dollar will boost global recovery, potentially ushering in a U.S. golden age where risk on assets, especially crypto, could skyrocket within 2.5 months of new stimulus. So this is a lot to unpack, and it's literally kind of the thesis of the show here. We will continue to unfold this post throughout this. But in essence, guys, that's what's happening, right? And we'll talk about it. So we also saw, I'm sure you guys probably saw, Zelensky in the Oval Office talking with Trump and Vance, how that got out of hand. I don't know why Zelensky thinks that he's going to side with Ukraine against Putin. Trump's made it very clear from a diplomatic perspective, he can't be on either side. This makes it even more clear that Trump, if anything, doesn't want to side with Russia, but wants to end the negative, bad relationship that the Biden administration had with Russia. He's trying to make peace. And there was a lot of negativity between the United States and Russia during the Biden administration. Oh, do you guys remember that? Me personally, I don't like that, right? If I was out there, I would be trying to make friends with every single country. I know it's impossible to do because there's global politics at play. But if you think about it, if you want to make America a strong country again, you have to make ties with countries that can benefit you the most. And when you think about it, Russia probably has more to offer Ukraine, and it probably makes more sense if you're thinking about a United States first mentality, which the United States president should be doing, then it makes sense that he's going to want to restore the relationship with Putin and stop the war in Ukraine. This post from Walter Bloomberg says that the White House is looking to possibly cut the sanctions that were imposed on Russia from the Biden administration for coming in and invading Ukraine. And if this happens, this will open up the trade between US and Russia again, effectively even lowering the cost of oil and other goods even more. Now, something amazing has happened even since last week. So Truflation, ladies and gentlemen, as we all know, one of the mandates that's being implemented from DOGE and the government is to make everything electronic and digital, digitize everything so we can get real-time data, right? And that's what Truflation has done. Truflation tracks all the goods that calculate actual inflation around the world. And as you guys can see, just from February 28th, so last week, inflation fell from 2.24 down to currently 1.42, like almost in half in the last week. Something is working. So how does this happen, right? And so Truflation, guys, you should check it out because this can give you an edge because the Fed is lags, right? So they're going to give you data when Jerome Powell in comments talks about Fed. But this gives you insight, like a crystal ball into the future on you can see real-time tracking. So why Truflation, right? Deep data. And I'm not sponsored or endorsed or anything, right? But this is an important macro indicator you should be looking at. Truflation.com. Deep data. We track 30 million items from over 80 plus data sources. Different categories lend different market insights. Faster, 30 to 50% faster than government statistics agencies. And they updated daily. Our item price tracking is updated every single day. So, we went over that chart the other day on how they measure CPI, the consumer price index, the inflation rate essentially. And so this site in America is tracking the cost of those goods that make up what the inflation rate actually is. Now this paints a completely different picture than what we're seeing being reported from the previous official inflation numbers. But this is a leading indicator, probably letting us know where we're heading. Inflation seems to be falling off of a cliff. Look at this, guys. 1.42%, right? So could rate cuts be coming sooner than you might think? Miles over here says the number of rate cuts being priced in by markets for 2025 has just reached multi-month highs. Markets are betting that the Fed will cut rates 3 times this year, up from only 1 cut earlier this month. What? A 3-fold increase in rate cuts this year, as opposed to just what was being speculated 1 month ago? All eyes on the FOMC meeting in 2 weeks. And I'll give you guys a calendar of upcoming events to be watching in just a second. Inflation coming down, rate cut expectations increasing. Like I'm talking about, guys, a perfect market setup could be loading right now. So this guy Bach over here says, cycles with Bach. Fed is going to cut in March, ? The bond market is telling us the Fed will cut rates again much sooner than what is currently priced in. Winky face. The 2-year Treasury yield is now under 4%. It's down 40 basis points since mid-February. Pay attention. Trump is forcing Powell's hand, and the bond market is buying into it. So because on top of this, I don't know where it is. I saw another post. I was looking for it. I can't find it right now. Maybe it's later in the show. But the Atlanta Federal Reserve forecasted a decrease in GDP of the United States by negative 2.8%. So a decrease in the amount of money all money is being made within the United States. So the economy is slowing down. So you have a weaker economy. You got bond rates, treasury yields coming down. Guys, look, it's not just a 2-year rate, right? Remember we talked in video last week, we talked about the 10-year treasury and what Trump wants to bring down the 10-year treasury yield. Look at this. This is dropping like a fly as well. You can see just 2 weeks ago, this was at 4.63%. Now it's all the way down to almost 4%. So the 10-year treasury yields are also dropping, which means that there's more demand for these treasury yields. They're more expensive and the yields are being decreased as people come to a more risk-off environment. All the factors that we talked about are setting up to essentially force the Fed to lower rates and probably start printing money into quantitative easing. They have to stimulate. If growth is dying down and job losses go up, this is why you see the stock market coming down. This is why the crypto market is coming down. Everything's being set up for, yes, things to go lower in the short term. Right now, we'll see what happens on the March 7th crypto meetup they have, whatever. We'll talk about that in a second. But if we don't have significant and meaningful and actionable news coming out of that, we could see the markets going much, much lower for now. But what I see happening here is I see this being set up right now where the Fed is going to flip to dovish very soon and probably begin quantitative easing, because a weaker dollar can also help offset global trade. So even if a country is putting a tariff on the United States to import their goods, let's say Australia, or let's say even Canada, right? Let's say Canada, right? Canada, because we know that's a 25%. But if the dollar is really strong against the Canadian dollar and there's a 25% tariff on top of it, well, the Canadians are not going to be buying American goods. And those American companies selling to Canada are not going to be making as much money, shrinking the economy, shrinking the GDP. On the flip side, when the Fed flips and starts to lower interest rates, it cuts the cost of borrowing, stimulates the economy, makes people borrow for business loans, for car loans, house loans, etc. But also they turn on the money printer to get things stimulating again. And this will actually weaken the US dollar. And so if you have a weakening US dollar compared to, let's say, the Canadian dollar, now it makes things cheaper to buy from America. So it makes that 25% tariff not seem so dramatic at the end of the day. So this is a tricky macroeconomic environment that's being set up right now. So key events that we want to watch this week. February, we have the ISM manufacturing PMI data. So that should have been happening today. And then we have employment data on Wednesday from the non-farm. Jobless claims data comes out on Thursday. The jobs report on Friday. Friday's a big day because Jerome Powell speaks on Friday. And there's a total of 9 federal speaker events this week. This week is all about the labor market and the Fed. What are we expecting to see? Job losses. And the Federal Reserve's job is to create jobs or limit joblessness and control inflation. That is their primary job, right? We've seen that. We've showed you those clips before of the Fed saying that they will pull levers and do what they have to do to keep those things in check. So from a crypto news perspective, let's talk about a couple of things real quick. Commissioner Hester Pierce of the SEC announces the crypto task force staff. So these folks here on the screen are going to be responsible for creating policy within the SEC for crypto, which is great. I really want to know what I can and cannot do if I'm dealing with America. Please, as an American who's been in crypto for 13 years, for the love of God, can someone please tell me what I'm allowed to do? Can we tell me what Americans are allowed to do? Can Americans participate in public sales? Can they participate in private sales? Can they buy me? What is happening? Like, let it be good for us to finally have policy. Now, remember, these are all initial steps. It's been 45 days or so since the new administration has taken office, and things are moving, but the markets aren't going to move on news alone, right? We have positive news happening all the time, like the SEC dropping all these lawsuits. And we also have things like these congressional crypto caucuses being developed in order to assist and help shape digital asset policy. Again, very good for pro-crypto. We've got pro-crypto in all of Washington, there's Republicans and Democrats and the Senate and the House and Trump, obviously, everybody, like a lot of pro-crypto people there. But when it comes down to it, negotiations has to be done, and these laws that are being drafted, these bills, still have to be passed through Congress, right? So it'll take time. But the most likely thing to actually pump markets is the economic kind of theory that we've been talking about, forcing the Fed to flip to quantitative easing. The US Senate expected to vote on easing IRS crypto broker rule that threatens DeFi. So the TLDR of this is that the recent IRS rule that makes hefty disclosure demands of decentralized financial projects is heading to the US Senate vote this week, and it aims to scrap it, sources say. I mean, that's the biggest thing that's most important. Like, if you're talking about true DeFi, which I sure as hell hope that they're talking about DeFi, not just tokenized TradFi, then it's insane. And it shows that people don't understand crypto to ask for things like KYC and AML, and to say that a software developer who created something like Uniswap or created Aave or Commonwealth or Pay Network, that these guys are now brokers, right? And dealing in securities. No. This is what is called decentralization, right? And I'm very, very, very thankful that it's being acknowledged by the administration that crypto is in its own class, especially when it comes to decentralized finance and decentralized products, totally different than our real world assets and tokenized assets, right? And we need clear distinction between the two of them. March 6th is going to be a big day, the US Securities and Exchange Commission posted. Acting Chairman Ueda will be participating in a fireside chat with Wall Street Journal CFO Network Summit. The topics of discussion on regulatory rules, from climate and cybersecurity disclosures to cryptocurrencies and enforcement actions. Hopefully we get some more clarity about the mindset of where the SEC is headed when it comes down to enforcement on the crypto industry. What we've seen right now is the easing of enforcement or the reversal of enforcement. And on Friday, this is a big deal, right? And I don't know what could come out of this, because we need things like Trump to address the industry leaders at first crypto summit on Friday as regulators abandon key lawsuits. So US President Donald Trump will address crypto industry leaders in an inaugural crypto summit at the White House on Friday. The conference comes amid a widespread withdrawal of regulatory actions and investigations against companies in the crypto industry. I expect this personally to, if anything, give us some more direction and where we're going as an industry at whole. Could it lead to another pump? Sure. Will that pump be taken back down on Monday? Most likely. But the indicators are flashing in the right direction, in my opinion, to set us up for something quite special. When it comes down to the month of March, there's some very important things to pay attention to. So on the 6th, there's also the CFTC Forum on Tokenized Assets and Stablecoins. Very important if you're into the RWA space. We already mentioned the Crypto Summit. You also have the March 10th to 14th Senate Banking Committee to vote on the stablecoin bill. If we get a stablecoin bill that passes, we should see hundreds of billions of dollars flowing into the crypto market, initially into stablecoins around the world, but that will trickle into our bags. Very, very bullish. And that I think that's a bipartisan thing. I think that both sides of the aisle believe that is likely to pass. And on the 21st, the SEC holds its first crypto roundtable. I'd love to actually go to that if it's possible. I won't be in the States by then. But anyway, key important dates for us to keep in mind for this month. And I wanted to ask you guys, this is just a fun thought experiment. Let me know in the comments below. We all know that Trump is a deal maker. He says it all the time. He spent his whole life making deals, right? And when you talk about the art of the deal, when you're trying to negotiate something, let's say that you want to sell a building for $80 million, right? Well, you don't start at $80 million to a prospective buyer. Now, you start at $100 million. He comes in at $60 million, and you settle on $80 million. Both parties feel like they won. At the end of the day, you wanted $80 million. You got $80 million. Bam. Remember, the strategic reserve needs to go through Congress. So let me know in the comments below, guys, if you think Trump is playing 4D chess. Did he mention XRP, ADA, and Sol just so that he has some cards to play at the negotiation table so that he could clip those so that we could for sure lock in something like Bitcoin and maybe ETH in the reserve? It's a classic negotiation tactic. I want to know what you guys think in the comments below. Let me know also if you appreciate these kind of videos. If you agree with me or disagree with me on the fact that it seems like we're setting up, not yet, but maybe sooner than a lot of people expected. Even just the end of last week, I was having discussions with other founders, with my own executive teams, talking about the fact that we were thinking that maybe this is going to lead all the way into Q3, Q4 before we see this flip and we see markets start to pump. The story we told today tells a little bit of a different perspective. Let me know what you guys think. See you in the next one. Bye.